Welcome to Ahead of the Curve. Subscribe now.
Welcome to Ahead of the Curve 1776. It is me, Mr. Curve. Hope you guys had a great two-day trading Thursday and Friday to wrap up the trading week. It was definitely eventful. The entire week was absolutely nuts. So many different things transpired. We had banks collapsing. We had injection of liquidity of $300 billion. You know, we had the Fed balance sheet being raised. We had banks bidding on other banks. We've had backstopping happen. So many things, guys. We had commodities soaring. We had crypto soaring. An excellent and a great time to be involved in the markets, guys, because this is what we live for. The trader and the investor, this is what we do 24/7. And thank you guys for joining the channel, guys. Make sure you guys use my links up here. Appreciate it. If you're new to the channel, we talk about everything from economic data, monetary policy, politics, market, and trading strategies. So let's get to the data and let's get to the money. So we did have the unemployment claims jump from a medium indicator to a high alert indicator here. So they are definitely watching a lot more closely to see the tide turning for those job numbers and see if we can get off that 3.5% unemployment rate, getting that higher. I'm guessing that's what they want, honestly, at this point, because they've been hiking up to this point, and the crescendo would have been starting to see those numbers tick up quite a bit. We also had the Eurozone, the ECB released their interest rate decision. Now, I will tell you, I watched the conference, I read the statement, and they went up 50 basis points, and honestly, it just sounded like a very dovish take on where they're going, even though they went up 50 basis points. So at this point, guys, you never look at what's baked into the cake. Always do what the traders do. Buy the rumor, sell the fact. We knew it was going to be 50 basis points. Just like on Wednesday, we know that they're going to possibly raise a quarter point. That's already a given. That will be traded between Monday and then Wednesday. And then Wednesday at 2 p.m. Eastern, 1 p.m. Central, 11 o'clock Pacific Standard. That'll be when we actually are seeing what's going to take place and what will be the forecast going forward. But yeah, very dovish statement. We also had Treasury Secretary Yellen spoke, and then basically reiterated more of the same. Had got caught up in several different nuanced questions that essentially we're going to say that the smaller banks could fail. I think they have to try to say something because either way they're going to be in bad shape. If they let the smaller banks fail, obviously that'll be a small contagion that will lead to a bigger contagion. If they say that they're going to save everybody under the sun, including their moms, then obviously we're going to have an inflationary event. So it's going to be either way, guys. They're not going to be able to win either way. Now, here's some key numbers here coming out of the U.S. We had the U.S. capacity utilization rate that ticked down. Also, industrial production zeroed out there. Preliminary University of Michigan consumer sentiment came at 63.4. Definitely well off the beat of what it was supposed to be, kind of relatively the same, and then it definitely did take a decrease there. So, all in all, guys, a lot of people are weary. And again, that was for prior month there, because you guys can see here. Released around the middle of the month here, so a lot of people are actually, it's going to be the preliminary and then the revised. The preliminary always gets the more impactful, so they basically survey 500 consumers and see what their thoughts are. So they're definitely not in a very good space as far as what they believe will happen. And that was basically a recap of the week, guys. I did the video before on the other things. We got softer numbers on CPI. We had the PPI also, falling off a cliff. Empire State falling off of a cliff. Australia not doing too bad there. Unemployment claims that jumped from a medium indicator to a high alert indicator, so we are watching that very closely. 50-point basis rate increase for the ECB. Yellen spoke. Jerome Powell, echoed there. We also had Biden spoke as well too. Had so many people speak this week. It was definitely an eventful week. Let's get to the week ahead. The week ahead, guys, is probably one of the most crucial, pivotal weeks of probably the entire year, because it will shape up whether we're going to be QT or QE, quantitative tightening or quantitative easing. What has already been said, what already has been done, always watch what people do, not what they say. But pretty much what already has been done is quantitative easing. I mean, we've raised the balance sheet. We say we're going to backstop certain entities, which is good news to my ears, guys. I don't want to see everything deployed, because at the end of the day, I'm a trader. I need things being based in US dollars, possibly going up, possibly going out. But the key is I need it to be placid, and I need it to be calm, so that way I can predict and pun intended, stay ahead of the curve so that way I can make a little bit of money. So let's scroll down here, guys. We got Canadian decision being, Canadian CPI data coming out, expecting a reading of, pretty much 5 to 6%, which is going to be pretty much on par month over month CPI. We will see what that is on an annualized basis. We'll scroll down here. Also, the UK's year over year, 9.9. Wow, at least they might be, officially ranking their numbers up for what they're actually supposed to be. I mean, you got almost a 10 handle on there. And that will supposedly be slightly less than what it is. But if it's about the same, it'll definitely be viewed positively. We'll scroll down here. And then last but not least, the Federal Reserve interest rate decision, a 1/4 point bump up. That is dovish, guys. I mean, even if it came with a very strong statement, which they never really do, they never accommodated with a very strong statement or hawkish statement, it's going to be viewed dovishly. I mean, I'm just going to already bank that into the brain here. I'm going to probably be laying out my trades accordingly, and I will probably be capitalizing on that like I always do, guys. So I definitely believe that that's what's going to transpire. I will think the Fed will have their cake and eat it too. I think they're going to give that 1/4 point. Jerome Powell come out and be like, hey guys, this is the situation, yada yada. We're taking care of everything. Everything is good. You have no problem, need to worry. And the market is going to do what they want, because at this point, the market is doing what it wants. It wants to see, they're going to start looking at what's happening compared to what they're being told. Because before, and this is how it should go, we should start seeing the rates kind of pull back. Rates increasing a little bit as liquidity is being pulled back, injected, and then we actually should see the opposite happen. We should start seeing interest rates lowering down as liquidity is being drawn out. So interest rates raising up as liquidity is being drawn out. So I mean, that's pretty much what should happen. Unfortunately, the banking crisis, this is all systemically based on debt, guys. There's a little bit too much debt out there compared to what people can tolerate, what these banks can tolerate. A lot of them are selling their bonds at lower coupons, so they're taking a loss when people are asking for dollars. Plus, another thing is too, when you hike those rates, you are effectively slowing down the economy, which means that there are less dollars that people can pay the banks, right? And most of the biggest cost factors out there for people are their mortgages, is their loans. So maybe it's a business loan, maybe it's a mortgage, maybe it's a HELOC, whatever it is. It's pretty high. It's not a utility bill or something small. It's something typically huge. So if they are having problems making those payments, it is going to be expressed via the banks. That's why the banks are always typically the first to fold outside of the tech sector. So let's scroll down here, guys. We also got Swiss National Bank also releasing a 50-point possible basis rate hike. We also have the Bank of England releasing their interest rate decision as well. 1/4 point as well. They're definitely mirroring the U.S. situation. We also projected to have majority raise that rate there with pretty much nobody really contesting it. And then also again, guys, look at this. Unemployment claims are viewing to tick up about 10,000 more than before. Now, I will tell you, we're going to see a cascading increase effect if we start to see people. If we start to see the banks start to pull back, because that means all businesses will pull back. The banking sector is the bedrock of the economy. So watch out below, guys. And again, for me, I hate to say this, I am a trader and an investor at the end of the day. Everything is priced in US dollars. This is good news for me, because this means that it is more likely that I can predict what possibly may happen in the future and profit off of it, as opposed to the last year where it was kind of back and forth and we literally had to hinge on and bite our nails on what was going to be said at the statement reading. So this is good news for me. All right, let's scroll down, guys. We got a whole bunch of PMIs that's going to be released on Friday, which is typically going to bring a lot of liquidity as well. And then to sum up the flash PMI for Friday, we're looking at anything below the 50 mark is a contraction. So we're looking at just probably overall a pure contraction. If we look at where we've been going, we've had several contractions there, so I doubt that we're going to be probably our neck above 50. But again, guys, this is going to be the week to tell all weeks. And I'm ready for it. I'm pretty sure you guys are, from an economic standpoint, from a monetary standpoint, and also to let you guys know in your own personal lives where you possibly need to go, how much liquidity is going to be provided to the markets. I will tell you, a lot of people are diversifying. They are getting into precious metals. They're getting into cryptos. I mean, this, if I had to guess where this was, maybe this is February, March of 2020, because at that point a lot of people were able to get into certain places when the when the balloon started to inflate, then definitely people probably would have made out. So here's your second chance again. Try to revisit things. Make sure you talk to a licensed professional, do your own due diligence. But yeah, at the end of the day, you could possibly do pretty well. Let's get over to the Euro/US dollar, the most liquid pair in Forex trading. So a lot of people were not sold on the numbers, guys, and then also Friday we did have those weaker numbers, so we definitely did push up there. Again, this is Euro/US dollar. If that's going down, then we're probably seeing the dollar get stronger. You also want to check the dollar index as well too to see what that looks like. And then that just raised up, guys. So, I mean, I was able to grab a few pips as well from that. And again, guys, this is excellent for me because as you guys can see here, it's not consolidating a lot. We're starting to see a real big uptrend. I was able to gain about 20 or 30 pips on that, and that is incremental, and that is pivotal for me. So that way I'm able to guess and see what's going on so that way I can benefit from it. So that is pretty much, I'm just going to show you guys that little bit of run up for today, guys. Again, this is great news for me. I know this might, probably rub a lot of people the wrong way, or some people might feel like, hey, my dollar is getting depreciated, is my capital going to be safe in the banks, yada yada. Yes, guys, that is always going to be the case. That would be the case whether they told you guys that or not, whether they were being transparent or not. It is up to you to do your own due diligence and hedge yourself at all times, so that way you can do what you already came to with this channel. Stay ahead of the curve. Let's get you guys now over to the metals market. I want to talk about a few things there. So let's go ahead and take a look at a 1 hour chart on gold. Gold absolutely went bonkers, guys. Just shot up there, which was, I also trade this one as well, just due to how liquid it is and how many people's eyes are on it. And then lately, a lot of people's eyes have been on it, so that definitely has helped the trading immensely. So we'll come here, guys. Had that shot up in the morning, guys. Definitely able to benefit off that as well too. So I mean, all in all, guys, this is the markets are expressing the jig's up. They are realizing quantitative easing is back on the table, and at this point, I mean, they're really not wrong. I mean, the money's being printed, and again, this is what they do. I mean, we can't go out. We have never went out too far. I've already told you guys, 5.25 is typically the farthest terminal rate that we go in the last 10, 15 years, maybe 20 years. We have went farther, obviously, back in the past, but we're not going to be doing it anymore just due to how much debt and everything that we have going on and how intermingled everything is. It's just not possible. Let's get you guys now over to the energies market. Let's talk about a few things there. Oh, also real quick, I didn't do this with the Euro/US dollar. I do definitely see the Euro/US dollar pushing up a little bit for the week. I don't believe anything that they're going to say this week is going to, woo the markets into believing that we still have a strong monetary policy stance. I think they're going to believe it's dovish, regardless if the Jerome Powell even came out there in a hawk suit and gave his statement. It's pretty much still going to be a dovish statement. Quarter point typically means that we're just doing this for appearances, and that's pretty much it. So I definitely do see the Euro/US dollar pushing up. Gold, I also see pushing up towards that 2,000 mark probably for this next week. I think we might have a crazy black swan event, maybe pull it back a little bit. It is possible. Also keep in mind if the Swiss as well as the Brits actually have a very strong statement for their interest rate decisions, we could possibly see the dollar definitely get a lot weaker. And we will talk about that further in the video as well too. But let's get you guys now over to WTI. I want to talk about that. WTI literally fell off a cliff, off a canyon cliff, if you will, pretty much for the week, which is nice because then I'm able to fill up my tanks a lot faster. I'm sorry, a lot better than I was before. People were pretty much fighting over pumps this week, which is pretty nice for a change. So everybody would love to see these WTI prices come down. I mean, we want to see them in the toilet. We want to see them like $20, $30, $20, $30 a barrel, which would be very nice for us because that'll probably put gasoline at probably like $2, maybe $1.75, which is very nice. So where I see this going, I might see a resurgence a little bit in the US dollar. We're probably going to see this push back up. I definitely think that we're probably going to, due to the inflationary situation of the week, just everything going on, probably getting back up to that 70 handle as a nice little support level there. I think that will be probably the support if we don't just continue to slide, because we do have a risk off reversion happening. So it's hard for me to predict with WTI. It's a very volatile instrument because it can literally fall down, as you guys can see here, like $7 in a matter of a few hours. So just be mindful mindful of that, guys. I do not trade WTI as much as I used to, just due to its volatility. I'm not able to predict it as much as I would like to, unless the trend has already started and I'm able to capitalize off that, off the 1 minute, 5 minutes, 15 minute, 30 minute, and the 1 hour chart there. But guys, yeah. And again, I'll go into these things a little bit further as we go along in the channel, but I just wanted to tell you guys that I probably see this in a 70 to 65 range. It could push low as that 60 handle, but I don't see it probably breaching that unless something crazy happens. And the traders are just pushing it down. Let's get you guys now over to the cryptos. I know you guys love those. You know, cryptos, guys, these things trade 24/7. They do not take a nap. They do not go away for the weekend, which is pretty nice. I mean, I'm able to continue to keep trading if I want to trade these instruments. So as you guys can see here, Bitcoin is actually pulling back a little bit here. It had a huge run up. We'll go ahead and click that chart, show you guys that as well. Had a huge run up. 4 hour chart from the 13th on, which was about like 5 days ago, middle of the week, it just shot up. I mean, if we had to put this in percentages, 30% very easily, which is very nice. A lot of people got into that once they realized that the banking situation might not be as sound as one would like. And again, guys, do I believe this is a safe haven? No, I don't believe it's a safe haven. But could it be a medium of exchange? Yes, it is a medium of exchange. A lot of people don't think it is, but it is. Do I think I'm going to store all my wealth in it? Absolutely not. I've told you guys that for years in the channel. It's absolutely not. But it is a tradable instrument. It is a medium of exchange for whoever will accept it, two parties, right? Yes, you do carry some third-party risk, but pretty much everything today, if it's involved in some type of electronic form, you will have a third-party risk. Let's go ahead and check out the coin percentages as well, too. I want to kind of see what those are looking like, what's shaping up for those. Bitcoin still holding the reign there at 68%. Ether dropping down at, a little bit lower there, but we got a plus or minus. A lot of people piling into Bitcoin because it's just the oldest and greatest, right? We got Doge doing a little bit. We got scroll down here. A lot of them are actually doing pretty well. Pretty well so far. Let me scroll down. Let's get some more here. Yeah. A lot of them are just doing well. We also got that Bitcoin Cash. A lot of people were piling into that, even though that's pulling back right now, guys. But again, guys, this is all speculative. Make sure you do your homework, do your due diligence. Where I see it going possibly for the week, it might have a small pullback to the 25 handle. It's very well possible just due to the statement and how it might be viewed. Or if we have another shoe drop or something crazy happens like it's been happening in the last few days, who knows, right? Maybe we're at the 30, 35 handle. We'll have to see how it develops, and I'll be right there for you guys as it develops. Let's get you guys now over to the dollar index. I want to talk about as in whole macro of what I see for the week. So as we're going to look at a weekly here, guys, we definitely pulled back quite a bit here. I mean, we pulled back from starting the week out from this time last week. Or a little bit further there. We actually started at about 104.08, somewhere around there, guys, and then we definitely did pull back here to the 103 mark. We're actually already open for trading so far. I'm sorry, we'll be open for trading tomorrow here, but yeah, we're definitely pulling back quite a bit, guys. We actually shot up a little bit there, had some reprieve there, but then we definitely just came right back to where we were before, starting that downward descent there. And then on 1 March chart, let's check it out. Pretty flat. We're definitely going the other way. And here's why. Around this time, guys, we had pretty much Jerome Powell with that Senate Banking Committee meeting, pretty much jawboning, getting the markets to believe that he was actually still serious about that, restrictive stance. And then, bam, all hell broke loose, essentially. So pretty much, guys, yeah, we're definitely pulling back here. Still see a downward slope unless that statement can somehow woo the markets. But I'm definitely seeing the dollar index probably pushing towards the 103, lower 103 bound, maybe about 102.50 to be a support level for the week. Possible wild card being the 104.50 for resistance level. But we'll check it out, guys. As you guys can see, yeah, that's pretty much where we have been. But I do see this being a false uptrend for sure, guys. I mean, that's how I'm looking at it from everything that's given. But let's go ahead and get you guys over to the stock market. Let's see what happened for the few trading days, and let's see what possibly may happen for the week. Stocks definitely got beaten down, guys. We had the banking sector as a whole and tech also in a seesaw effect. We had banks saving banks. We had Fed saving banks. We had people job hunting all over the place. We had people, coming to others' aids. And then, I'm not gonna lie, yesterday, Friday, pretty much they came out and said JP Morgan and the certain banks was like, hey, we're gonna backstop First Republic. So I mean, all's well ends well, I guess. I'm pretty sure that was a directive of someone. But pretty much, yeah, it's pretty much what happened, guys. And we had pretty much a downward slope. We had that VIX shoot back up, even though we got that guy back down, I think, to like 23, which is very nice. But once we get close to that 20 mark, we're doing pretty good there. Where I see these guys, and a lot of people believe a 1.5%, a 2% on the Dow is a horrible. That is nothing, guys. On a percentage basis, it's absolutely nothing. And a trading day, I've seen them go down as low as 4.5%, probably get halted, and then before the day is done, they resume trading, and then it's back up, guys. So I mean, that's really not anything. We need to see like a real correction would be like 10%, 10-15%. In a couple trading days. Now we're talking. Right now we're pulling back. Now possibly people are running to safe havens. But as far as these bonds are not convinced. The yields are going down, guys. They're already forecasting that this is over with. The pony has left the building. So we're gonna definitely see how it plays out long term. But yeah, the bonds are not convinced. The equities are not convinced. The Nasdaq pulled up a little bit to end the week somewhat flat as far as the main named contenders there. But yeah, all in all, guys, that's pretty much where I see stocks possibly for the week. Probably see them relatively the same, just due to so many assets are based upon these stocks. Different ETFs, investments, 401ks, IRAs, etc. I see so many different things tied to this that I don't think they're going to let this slip. So I'm thinking they're probably going to be relatively the same. Let's get you guys now over to bar chart here. So as you guys can see here, again, guys, we had a little bit of these guys pulling back. As you guys can see, we had Tesla pulling back, Nvidia pulling back, Microsoft pulling back. Definitely a crazy time in stocks overall. I do actually trade some options on Tesla just because it's very liquid. I like to be in the liquid names, Nvidia, Tesla, Microsoft. That's why I always love looking at the stock market leaders, because it's very liquid and I like to be able to get in and out. Options, like I told you in my older videos, have an expiration. Closer you start to get towards that, time decay does take out your money, especially if you're out of the money, for sure. So definitely take a look at everything, guys. Bar chart is an excellent site. I love them I love them a lot for what they're able to give. And a lot of times you don't have to. I do have a Premier account, but you don't have to have one. But again, guys, what I see for the week, will end it off like this. What I see for the week is, if you're a trader like me, you're keeping some powder dry, you're setting up certain trades, what the most probable outcome is we're going to get a dovish statement, and it's going to be crazy. We're going to see a lot of things all over the place. Hopefully we do not get too many shoes to drop, or so many, a couple black swans, because then that always throws off the trading day. We did have a lot of volatility about Tuesday, Wednesday. I did lose a little bit of money just due to all the volatility, but I was able to kind of end the week flat for Thursday and Friday. They kind of got it back under control. Now again, they can come out jawbone all they want, guys, but again, this is looking like, is it QT? Is it QE? Leave a comment down there and let me know what you guys think. Please elaborate a little bit. Love to hear you guys' thoughts. But I appreciate you guys joining me. If you watched the video in its entirety, please give this a thumbs up. Make sure you hit that bell notification for the latest videos. And as always, in order to be profitable, one must have the knowledge and insight about the next trade or position to stay ahead of the curve. I appreciate you guys joining me. Happy trading this week, and I will talk to you guys probably on Wednesday.